in the event that a home comes in undervalued on a conventional loan, FHA loan, USDA, whatever the loan may be, there are things that realtors can do to overcome it.
If you can't write a contract on the back of your car on a Saturday night, then you don't know enough. All you have to do is show up. Just show up and you can succeed. Let's get to the point.
Today on the show, we have from LendSmart, Mallory Fotiades. I checked that name pronunciation before we went on the air. I'd recorded because I've messed it up before. But Mallory, what we're here to learn today is what the heck is going on with the mortgage business and interest rates and things that are affecting your business and our real estate transactions. So let's talk about interest rates first. I think everybody's up on that.
Oh, that is the hot topic right now. Just within, since the beginning of the year, we've seen a drastic, and I'm talking drastic, 3 points, in some cases, for interest rates. We've gone from 2.25, and now we're in the low 5s for interest rates. So that is a dramatic increase that we've seen.
And what effect has that had on borrowers?
What they can get approved for. If you're looking and you've had clients in your pipeline, let's say from 3 months ago, and you had them up at $450,000, you may only be able to get $350,000, $360,000. So it really limits their purchasing power. So if you're not keeping up with them, even as a realtor, if you've got people in your database who are just kind of shopping, you may run into some issues if you're not with a lender who's keeping up with what they're pre-approved for.
Wow. So if you've had a client from the past that was qualified for a certain amount and they need to come back and check what they qualify for now?
Absolutely.
Okay.
Definitely.
Really good advice. First thing. All right. And so let's talk more. So it's lowering their borrowing power. What's happening because of our market in the jumbo loan? Is the same thing occurring in the higher amounts?
Their jumbo rates are typically right now on par with what we're seeing for traditional conforming loan limits. So we're not seeing a huge impact with them, but there are some variances with their ability and what they're able to do.
Okay. But have they been affected as much?
No. At one point, when the interest rate started jumping up for conforming loan limits, we were actually seeing jumbo rates lower than conforming loan limits for a short period of time.
I see. So the market felt more comfortable lending money to them.
Yes.
I see. High net worth. So what is the forecast? And I know that's like crystal ball, but everyone wants to know what's going to happen the rest of the year. Yeah,
gosh. What we're seeing, we're definitely still continuing to see an upward trend for these. I've heard people say it all over the place. Oh, we're going to be up at 10%, and people are, kind of panic buying right now. We got to get in the house. We're going to see these rates go up. Really, we are going to see them go up. We're definitely probably going to see 6%. By the end of the year, we'll be pushing into the 6s, more than likely by the end of the year. Do I anticipate it going up more than that? Probably not. With a traditional mortgage, investment loans, that's a whole other ball games. We're already seeing 7% in some cases for investment properties.
Okay. So if I'm a real estate agent and I have clients, it doesn't matter whatever category they're looking in, what should they do? Lock in loans now, or what's the best advice?
So, there are some companies, that do allow you to lock and shop. We don't have the option to do that. But if you were to, let's say, get under contract for a new build, we do have extended locks that we are able to do to protect you from the market shift as the home is being built. We can do 120-day locks. In some cases, we may be able to go up to 365. There is a fee that we charge, a 1% fee up front, to be able to lock in at that 365 days. And if you close on the loan, then that gets refunded and gets rebated back to your closing cost.
Wow. So you're guaranteeing the current rate for 365 days
Yes.
for 1%.
Yes.
Wow, that's a lot.
It is. It is. So there's a lot of things that we're doing to try to protect, but unfortunately, unless you have that purchase contract in place, a lot of companies cannot guarantee that rate until you have a purchase contract.
Okay. Or how about VA loans?
Oh.
What's going on there?
I love my VA loans. I love them. But we definitely are seeing them, in the 5%, based, it's all credit based, and if you have a lower credit score, you might be at 5.375%. On average, I'm seeing about 5%. For interest rates. You might have a one-off where you see 4.875%. But, when we start looking into rates going up above a 5, we may actually start talking about discount points. What is it going to cost to buy down interest rates? Let's look at this long term. That's a heavy discussion going on a lot. How many points is it going to take to get me to a 3.5%? So that's a big topic going on right now.
So most of the younger people in real estate and probably the buyers have not been through that yet.
No.
Buying down points. Okay.
No.
So tell us a little about that. What does that mean? Explain that.
So when I'm looking at loans for myself or for my clients, I'm specifically looking at interest rates. I look at long term. I'm not just looking at the short term period. I'm looking, how long are you going to live in this house? If you're active duty military, are you going to be leaving in 3 years and just turning around and selling the home? So I look at it long term. So if people start talking to me about points, or I see you can get a better rate, at buying points, I'll actually do some math for you and I'll say, hey, we got a 5.25% interest rate with no points at all. I can get you at 4.75%. It might cost you $2,000 to do that. And then I'll do the math and see how long it's going to take you to recoup it. And typically, if it's going to be less than 36 months, I might say that it's a good idea to actually buy it down. But if we start going over that 36-month, that 3-year period, in my head, I'm thinking VA borrowers in and out every 2 to 3 years.
Yeah.
What's your goal for a home? So I really do look at recoupment when it comes to buying down points.
Okay. So you just don't get them a loan. You check it out and get them the best for them.
Yes.
That's really nice. Awesome.
Yeah.
Good for you. What else? The hot topics, low appraisals, I guess. Let's jump into that a minute.
Oh, gosh. Yes, I am seeing more and more low appraisals coming in. And it's not just VA loans that I'm seeing this. I'm seeing it on conventional loans as well. We're having some come in. But the great thing about if you have a VA loan and they initiate Tidewater, which means, hey, I can't support this. This is actually a really good time for listing agents and even buyer's agents to show their skills and say, hey, this is why I think the property that I listed is valued at this, and show comparable sales and provide information to help support that. But we are definitely seeing a shift. I am seeing appraisals come in low. And we're not talking, some of them are small spreads, but recently I've had 2 that have been well over $65,000 low, and there just wasn't anything to support it. Great comps were used, but the value just wasn't supported. So we're starting to see a shift with the market where you can't just list it and get what you want with it.
Right. Like the market won't catch up to whatever price you listed. Yeah, that's another topic that we'll get into one day for sure. Okay. So what is happening with a low appraisal? Like, tell us what, again, to teach real estate agents who are out there, if they get a maybe VA loan, you said Tidewater, FHA or another type of loan, what's been happening with those if they come in low?
So most lenders have something called an AMC that they do these appraisals through. They go through an appraisal management company, and there is a panel of appraisals that you get that are chosen from. It is a blind system. The lender will never know who that appraiser is until it's actually, the report is back in our hands. The appraisal management company knows, but we have no information. So we can't say, "Ooh, that one's a really bad one." We've had issues in the past with poor appraisals. We need it to be switched to somebody else. But then in the event that a home comes in undervalued on a conventional loan, FHA loan, USDA, whatever the loan may be, there are things that realtors can do to overcome it. We're able to submit something called a reconsideration of value form. I have a specific form that I'll pass out to the agents, and it's in a grid format, pretty much like a CMA, and you write down your supporting cells. And I'm seeing that a lot of appraisals or a lot of appraisers are saying, "Hey, go outside of that 1 ±1 radius right here. Maybe go 2 miles outside or 3 miles outside," just to make something that is going to be supportive of it. But we do have that form. I asked them to fill it out, if they want to contest the value of the home. And then we go through the process of, sending it back over to the appraiser. We'll send it to the AMC and we'll have them look at the data. Sometimes we can escalate it. The beautiful thing about the AMC is that they actually do have appraisers on staff to review everything. If the appraiser or the listing agent reviews the appraisal and they said, "Why was this comp used? It's not even close to a similar home," or "This adjustment wasn't used," we can always go back and have the appraiser on staff of the AMC review everything.
How long does that take? So appraisals have been coming in late, last minute. Now you're talking about how do you extend it? How many days does it take?
Most requirements for reconsideration of values for non-VA loans are 72 hours.
Okay.
So we're not talking, another week or 2 weeks. We really are looking at about 72 hours.
Since you deal with the market every day, what has been happening to low appraisals? Like, actually, what have the buyers and sellers been doing with them?
So it all kind of depends on the program, that we're doing. But I am seeing one that recently came in low, about 65,000 low.
Right.
It was a big spread. And it was a VA loan. So it was Tidewater. So we had no information prior. We had no clue what comps were going to be. There was a little bit of a fight with the listing agent. "I can't believe this, blah, blah, blah." And I said, "Just put together some information for me." And then when he started doing everything, he realized that he couldn't even come up and support the value.
So you asked the listing agent to come up with more value to prove it. I gotcha.
Yeah.
Did that one get done?
We did get it done. We didn't get the value that they wanted.
Seller lowered the price.
Seller lowered the price because, you could take the risk and take it off market, get it back under contract. Maybe an appraiser might see the value different, maybe not.
Right.
You might be dealing with the same thing. But I think sometimes it just takes, putting things on paper,
So you calmly asked the listing agent to provide value, couldn't do it,
Absolutely.
realized they were too high. And so did the buyer get the price that it appraised at?
Absolutely.
I see.
Absolutely.
Give us some other examples of how it works, things that happen.
So there was one, that I recently did, another VA loan. And there was actually an appraisal gap, a $6,000 appraisal gap for this one. So whatever the value was, the buyer agreed to pay $6,000 over the appraised value. You have to make sure they qualify for that. There's certain things that we do. But in this case, the borrower was actually using a down payment assistance program. And it was a $10,000 down payment assistance. It doesn't go just for down payment. You can use that for closing cost. They had a little bit of a spread. And when that appraisal came back and he was like, oh man, now I have to pay $6,000 out of my pocket. He started to panic a little bit about that realization of it. So we kind of brainstormed a little bit. And they were paying for title, the seller was. Doc stamps were on their side. And, I just suggested, hey, he's got excess money in these funds. We're going to be doing a principal reduction anyways. Why don't we push title and doc stamps over to the buyer's side and then have him bring in just the difference in the appraisal value. So rather than the veteran coming out of pocket a full $6,000, we were able just to shift some things around, have him come in with $3,000 out of pocket, and then move title and doc stamps over to his side. The seller still netted the same, because they were removing title fees and doc stamps from their side. So that's another way we're kind of overcoming, a few of the issues.
That was smart and creative. I should have asked you this in the beginning, in the opening. How long have you been doing this?
I have been doing this since 2018. I've been with my current company since October of 2018.
I see.
Mm-hmm.
So how did you become so smart to be able to think through these processes? I mean, that's pretty good. This is when markets shift is when creativity, if you've not been in it a long time, you have to become creative and figure out options to get them done. And it sounds like you're doing that.
Absolutely.
So that's really good.
Yeah. I stayed at home for 12 years. We were on a single income. So, I really keep that in the forefront of my mind when I'm dealing with my clients. So their money that they have is my top priority, making sure that they don't liquidate absolutely everything that they have to get into a home.
So down payment assistance, I don't think I've ever heard that. So tell us more a little about that.
Yeah. So the state of Florida actually has something, and it's directly through the state of Florida. And there's a couple of different options. Currently, there is something called Salute Our Soldiers, and it is geared specifically towards veterans. It is a $10,000 repayable loan. It is a 0% interest loan, so they're not making any payments on it at all. And if they were to sell the home or refinance the home, that $10,000 is going to be made payable in full, but they just use the proceeds from their sale to pay that off. Starting June 1st, the realtors actually pulled together. I don't know, have you heard about the program that was just passed, the $100 million program?
I think it came out today in the Florida Realtor website, right?
Yes, it did. So that was one thing that realtors really pushed. We have programs available for first-time homeowners. We have programs that are specifically geared towards our veterans and our military. But there's a lot of other people who are on the front lines. We've got teachers, education, first responders, our firemen, our police department, our paramedics, our medical fields, and our veterans. They're all on the front line, especially over the past 2 years. And they are recognizing that their income may not be the highest. They might have a hard time getting into the home. So that bill was just passed in February, and it's going live June 1st, and it's called Hometown Heroes. And it's a phenomenal program. You do have to be a first-time homeowner for it. But what it does allow is 5% of the loan amount, and it's going to be capped at $25,000. So this is a much greater loan amount, or assistance program than the previous ones in the past, because you can have a down payment with that and include some of the closing costs with it. It's a phenomenal program, and I'm really excited. There's about 50 to 60 occupations that do qualify for this or do fall under that. I do have a list, so if there's any questions, they can reach out and see if they qualify for it. But this is a program that just is going to help get people into homes and help them, in a market where buyers have to pay for truly everything on their side. This is going to help them do that.
I think that's shifting now also,
it is.
Where the buyers have to pay for everything.
Yes.
So things are moving.
Yes, they are.
All right. What else is going on that's affecting your business in real estate or in the mortgage industry and that affects us in real estate?
It does. I know what we're seeing, I've said it before with interest rates. A lot of people are, coming out of what they're getting priced out of homes is really what is happening. But something that I am seeing and what I really feel is going to happen with our market, everybody's been paying over ask, for so long.
Right.
We're going to stop seeing that. That's going to start slowing down. And, everybody keeps talking about, they want to wait until the market crashes before they buy a home. We're not going to see that.
Yeah, I don't think so.
We are well protected
Right.
with the guidelines in place. But what I do feel we are going to see is just a stabilization of the market. I know you're seeing it, with price reductions, just lowered. Pops up on Zillow. You see it. Notifications on that. It's slowly still going to increase. We're going to have inflation. That's just the way everything works. But it's not going to be as rapidly increasing as what we've seen over the past 2 years.
Right. I would agree. I think we've had the economic development coordinators. That's not their titles anymore, but we've had those guys on the show, and they're both forecasting new companies coming here with a lot of job support behind it. And so the fact that we're in Florida with good weather, great taxes, people want to be here.
They
right?
do.
So there will be, it's still going to be enough people showing up here that want and need to buy over and above civilians, over and above the military, right?
Absolutely.
And so, I don't see us having too big of a problem with that. Now, the inventory is going up.
It is.
And it's going to change things, and I've got to work to teach our younger agents what the future might look like and what they're going to have to do for it. All right. Anyway, Mallory, people want to get in touch with you because you care about people and you help them. How do they do that?
All right. You can just give me a call. My number is 910-818-8378. Or you can go to my website directly, and it's www.malloryfotiades.com.
Very good. Thanks, Mallory.
Thank you.
It's a pleasure to talk to you about it. And I got to say, I'll say it again, it's really nice that you actually go above and beyond to help everybody and understand that it's their money. And it's a big deal.